All right, guys, here we go. We're going to take a quick look at Gareth Soloway over in the Money Stocks and his thesis, the way he draws out the head and shoulders on the SPY, basically the ETF for the S&P 500. And should that head and shoulders break formation and go ahead and confirm to the downside, we have targets for that. So let's take a look at how he sets it up.
You'll see what I'm getting at here. So what we have here is, here's a potential head and shoulders. All right. Now, again, it's preliminary. Now, preliminary means that you're still in the process of forming the right shoulder. So the question is this at the highest point on the chart in recent history? Yup, it is. All right, check. Is the shoulder here and the shoulder here lower than the head? Check. All right, now has it broken the neckline? And is the neckline, well, we can draw the neckline in. Is the neckline flat to upsloping? Yes, it is, right? Slightly upsloping or flat. So check. That's another check. All right, so now it's checking off the boxes for, is it a valid head and shoulder pattern?
Okay, so let's go to the chart and take a look at it. This is on TradingView. I'm not for sure why you didn't put this together. You can find it right over here, and just go down to that head and shoulders is right in here. You can draw it out. And the sloping trend line, upsloping trend line is right here. And then another caveat to this, quite honestly, is that you want this shoulder actually lower, okay? So you want to go up, down, and you want that up previous shoulder lower, okay? That increases the odds, increases the probability for success. All right, so let's go back to the video.
All right, now the question is, has it broken the neckline, which would be the trigger? And the answer is it hasn't yet. The neckline is down here. Price has to violate that. Now, for all we know, we could go like this, right? I mean, it doesn't really matter. Ultimately, this is where it would trigger. And if it triggers, right? So let's do a little calculation here. And I love TradingView for these abilities here, just to quickly whip it out. So, in fact, we got to draw the neckline first on it. So bear.
Okay, so let me go ahead and speed this up. Basically, yeah, there's a measured move, and it's about, let's just call it 6%. And then here's the neckline. If we were to come up and just roll over in this area, it would take us down to about 407. Okay, but there's a few other things that need to take place first. Number one, let me show you this, okay? And this is why we rolled over so hard right here, okay? The first time we got below the 50 simple day moving average, just solid green line right here. So we broke it, came back, retested it, and then here we are today, okay? Now, as price moves up, especially into that 50, the shorts are going to be piling on even more and more, okay? Because that's already a proven resistance zone, number one. Number two, the moving average is beginning to flatten out, and it's tougher to get back price action back up and over a flat moving average. Doesn't matter if it's the 200, the 20, or what have you. Secondly, for the top traders, they know this is a significant measured move from the top down. Okay, and our Patreon members know what that is, know how to calculate it, but they're paid members, so I'm not going to give all that away. So, but anyway, they're going to be piling on real hard here. Now, if the market always does 100% of the time, you got to think like a criminal. Market always does what hurts the most. Okay, in other words, the most meaning the most retail investors, hurting the most retail investors, and also regarding the most money. Okay, so got to think like a criminal. And if we were to come down and get over this level right here where that little right shoulder is, that would put the extreme pressure on the shorts, and we could go parabolic up here and retest the highs pretty quickly. Okay, and I don't know, if I were one of the market makers or whatever, I would look forward to getting price up there and then setting the shorts on fire and having to of course, get out of their positions at a higher and higher price target. And it really wouldn't take much to do that, okay? And then secondly, let's say we do break this, okay? Come back, and we're down here, moved up, we're up here, we come back, break it, and come to the downside, okay? Now there are some safety nets down here to help us. Number one, we have the 100 simple day moving average right in here. Just call it 430. And right across here, we have a lot of price vibration through that area. We have this sideways price consolidation zone here that should provide a little bit of support. Should price come down into it, and then coming way back here, we have a high pivot here and a couple of hits over in this area as well, going back to April actually. So it's not all gloom and doom. And number one, and number two, normally we pull back in a bull market in the single digits. So yeah, we could right now we pull back about 6% in here from the high. Even if we were come down into this measure move, getting close to the 200, that would still be a single digit. And let me give you an example. During the banking crisis a few months ago, when a lot of banks were going under, so on and so forth, we only pulled back within a single digit here, 9%. We didn't even hit 10%. And previous to that, it was 8%. And our lows technically were back in October of 2022. And right here is when a lot of influencers, a lot of, who's who, financial gurus, alleged experts were saying we're going to go back from here. We're going to keep going lower and retest the lows of the COVID slam down back in March of 2020. And obviously, that hasn't happened, and here we are. So yeah, we do need these pullbacks, but it's not going to be as catastrophic as everybody says it's going to be. But that's another video for another time. So anyway, just wanted to bring you up to date here and give you our thesis on what may happen in the future. And if you're on the bull side, you want price action, around, over 446. 448 would even be better to get us a real strong move, maybe even a parabolic move up to the recent highs, make a little double top up here. And secondly, if we do roll over, we're looking for, a near-term bounce, this position be held in around the 430 area. And then if we, should drop lower, I'm just giving you, each scenario, each safety net area, we're looking around, 415 to be the saving grace there. But guys, thanks for watching. If you want to be able to figure this stuff out for yourself, know how to play the game on your own, and not to be dependent on influencers or anybody on CNBC, and be able to double check their work, see how good they are, see if they know what they're talking about. You need to learn classical technical analysis, and then you'll be able to do that and probably even be better than they are in a short period of time. Thanks for watching, and we'll see you on the charts.